Good morning. Good morning. All right. We got a little bit of quiet to start the day, right? Little red, but not by a huge amount. Let's see what we got also for earnings. Lots of good ones. Yep. McDonald's, UPS. McDonald's is sitting at all-time highs. It's a beautiful thing. Really, they posted a double beat for Q1. I posted a little bit of something in Trend about that. All right. So McDonald's, very nice double beat for Q1. They're at all-time highs. They beat on the top and the bottom, 2.63 versus 2.33 estimated, sales of 5.9 billion versus 5.59 billion. Now, some people are out immediately saying this is a recession tell. Not the fact that they double beat, right? But the fact that people are going to McDonald's and eating more because they can't afford other places. So it's one of those, for some as a harbinger of doom that the consumer is not so strong. I think the consumer is just strong and McDonald's is well positioned. And remember, they own a massive amount. I don't want to say massive. I don't know the exact amount. I used to know like 2 years ago, but I can't remember it anymore. They operate very much like a REIT. So they own a lot of their real estate in their model. They also have a very strong franchise, of course, but the point is they are like a REIT in addition to a consumer defensive play that is a tell on consumer supply. So it's not just as straightforward as sales and earnings. They actually do have some very substantial real estate. Okay. So that's one of the main reasons that I like McDonald's. Not that I have gone there for 20 years, except to use the bathroom. But the point is, this is definitely a solid company. So this was the point, and I happened to grab this on Twitter. Earnings this morning, by the way, you know that they're going to hit that 300. And now the line in the sand is 292. So that'll have to be updated in the trend list. But it's a strong global comp. And that was kind of more the point. It's not a sign that consumer is struggling. And that is definitely counter to the macro narrative. So let's take a look at the number in McDonald's. All right, so this was the chart before. Beautiful evening star reversal on a weekly. It overshot the 100, right? It has this kind of wide volatility and big picture. It had a massive, consolidation here before finally breaking out. And it took a long time back in March of 2021 when everything else was basically falling over, right? In other words, under the surface, we had the unprofitable tech implosion begin in February, first, second, third time frame. The K-Webs, the SPACs, you name it, the Bitcoins, it doesn't matter. Anything that was unprofitable tech was heading down, and then value cyclicals started heading up. It was a beautiful time to start my trend list, honestly. But not without drama. We still had pullbacks. We definitely had, a lot of digestion here, both on their comps, but also just dramatic kind of responses to the pullback that we had in 2022. But long story short, they digested this really well. Here's that, key 100-week moving average. And then they just shot up, hot fire flames, pulled back, and then moved higher. So this is definitely not what most people chase. And like I said, you can swing trade all kinds of stuff like PEP, right? PEP is this amazing swing trading vehicle. And I recommended that recently, even though I took it off the trend list, my bad. But the point was, and it hasn't broken the 100. It just looked like it was a nice vehicle for moving higher. And look what it is this morning. It is absolutely above that 186.62. And that was basically the all-time, not basically, it is the all-time high. So it's above there now on this strong global consumer demand. And Coca-Cola was out yesterday. They had already run into earnings. So first of all, this is a swing trade, although some still have this as a trend trade. It just got a little bit too wild and Tasmanian devil-like. So the point is, it's still a great trend trade. It's also recently recommended on this defensive rotation back in early March, XLU, XLP, XLV. PepsiCo is doing really well. Coca-Cola, I think, was more of a buy the rumor of a beat and then sell the news of a beat. And that is exactly what this candle indicates. Look at that gorgeous, and I do mean gorgeous, rejection candle. By the way, I don't think that's going to last. I really don't. I think this can pull back and get supported. They doubled their 6-pack, the price of their 6-pack, their 12-pack, excuse me, and they're still doing well, right? So this was basically, you met supply right here at this 64, 65 when I warned yesterday, right? Gorgeous, gorgeous rejection at 64, 65. It hit almost the Keltner channel on a weekly. It hit, on a daily, just phenomenal at 127.5 fib level, and then came right back in. So this to me is just kind of like some immediate sell orders because it's a supply area. I think it will probably work through this, by the way, but it wouldn't surprise me if it comes down to 62.90 and then pushes higher. So Coca-Cola, for those that have this long, also has done, this was really dramatic. That was taken off. But it is back above 60, big picture. If you're trend protecting, if you're swing long above this trend line, or 63 is definitely where it could come back in pretty easily. You can also see the 21-day right here, 62.74-ish. All right, so that's Coca-Cola. PepsiCo pushing higher on not only Coca-Cola, but also I think just plain and simple consumer spending globally is just not as worse as it feared. That. So McDonald's looks really, really good. Long story short. All right, so let's go take a look. Diamond's a little, succumbing to some weakness. S&P 4140 is below the 4150. Right? It's going to happen. I still see 4089. You know that. I'm like, okay. NASDAQ is still sideways, which is really painful. I know. Basically 315, 315, 315 keeps getting defended violently. And the Russell's down a little bit more. So we're having some softness this morning as we open up, but will it follow through a few more points to get to that, level that I'm looking for? You know how I feel about this gap getting filled at 75. That's not too tough. The question is what it does at 75. And nat gas still playing its game, coming right back down to that trend line, no question. The big news this morning is the 10-year, right? The 2-year, whatever. Bonds are moving higher. And we're going to go look at that chart. But also remember, copper is moving lower, bonds move higher. Just humor me. So my absolute orientation is intermarket. I try and figure out the pieces of the puzzle on the macro and learn about it. Thank God for Craig, right? Who can explain the plumbing of this stuff. It's more natural for him, okay? What's natural for me is intermarket. Copper goes down, bonds go up, and vice versa. Just humor me. So anyway, we have a big sell-off in iron ore as well. That steel that I showed you looks like it could also come under some pressure, but this is that big kind of reflation trade weakness from this huge kind of bearish engulfing, right? So we've talked about this big bearish engulfing and then a bounce into resistance and it's rolling over. So XME, SLX hasn't broken yet, but the point is, and copper, right? We had this fabulous breakout, beautiful, right into 42, and I warned careful, and it's coming back down. So we're definitely, even pre-market, we're at 39. Not a surprise. Look at the support, 38.80, 38, this area. Now, I honestly wanted to see what's going on because I saw the iron ore sell off. China's definitely weakening. We had a little bit of what Martin Pring calls, and I love this expression, a Pinocchio bar. So in the Shanghai, it's not here in KWeb, but you can see how KWeb is, obviously falling. Okay, so in the Shanghai itself, it had a solid week where it closed above a key trend line. I wish I could find it. I've got it in my mind's eye, but let me see if I can find it. And then it got right back underneath. So he calls that a Pinocchio. I love that. I love Martin Pring. Speaking of intermarket analysis. So let me just see if I can find that because it's cute as could be. He literally calls it a Pinocchio. And he's lying. That's what it means. It's a breakout. It's my version of a fake breakout fast failure, but that's really for me anyway, a pattern that needs to break out and then fail. Here it is. Here it is. So this, remember I was saying last week, we need to watch this. Okay, so this is Shanghai Stock Exchange. And you see how it poked? This was the level of resistance. It tagged and it came back in. But this is the Pinocchio that that Martin Pree refers to, where it gets above a key. This is, a key moving average or a trend line or what have you, but it doesn't stay there. This is on a weekly. It doesn't stay there. It comes back below. So it's kind of lying. So anyway, K-Web is definitely in distribution. And if you notice, we're kind of rolling over down here with MACD. And I would say we're not in Tokyo. This is still moving higher. And here's the German DAX. It's been basically the inflation trade has been Europe. So anyway, that's it. I just wanted to show you that real quick and get back to bonds and all that good jazz. So let's do that. And the dollar's having a little bit of a bounce, and VIX is, a little bit of a bounce, but really, how quiet it was yesterday. I mean, incredibly quiet. And this morning we have, silver, forget nat gas, and copper. Those are the two that I really, really follow. Coffee has been very strong with sugar. Palladium, it's so hard to trade as a retail. So anyway, that point is, let's go take a look. All right, so here's the dollar, big, support here on 101 as expected, into that almost 106, 105.66 to be exact, and then back down to 101, which matters because this is the COVID kind of support area before we rolled over into the summer and then got supported very firmly in summer of 2021. And then that's all that central bank intervention, right, which is waning now. So I've posted liquidity in market thoughts. This is important as far as I'm concerned to everything: volatility, liquidity, downside convexity, risks are rising, liquidity right here. So to me, and read this if you haven't, because I put together notes Friday, Saturday, Sunday, because we're getting into this space where I know everyone's obsessed with debt ceiling for good reason. We've never, really failed miserably, except for 2011. Trump did hold it hostage for, I forget how many days, 35, but we didn't default. We did have a Fitch downgrade in 2011. That was a real thing after the market already had fallen 20%. And then the Fed came in with QE. So the point is, debt ceiling for right now being pulled forward, all about tax collections. I write about this. We still don't have a trigger, right? We have tons of earnings this week. It's a big deal. Amazon, Google, Microsoft, oh my, but it's Apple, Fed, and BOJ that are much, much more front and center. By the way, non-farm payrolls. Dang it, I forgot to put that. So anyway, you've got my fascination here with non-farm payrolls as well, starting to percolate higher, right? I'm seeing this happen, but I don't think it's, right now. I think it's after debt ceiling. So if debt ceiling is resolved, I don't care when it is. I just see this as a problem. So to me, I'm looking at different metrics. The mechanics are thus, okay? And I said this, and it worked by the rumor. This was on March 12th and 13th, okay? By the rumor of a Fed pause pivot, sell the news of a Fed pause pivot, right? That has worked. We really, really have moved higher, clearly, right? This is it right here. That is March 13th. Whether it be NASDAQ, even though we've gone sideways, we're a lot higher. Whether it's SPX, here's the 13th. Even if we've gone sideways, it's a lot higher. So by the rumor, because they came in and backstopped the bank crisis, of a Fed pause pivot and then sell the news. So what would cause them to pause or pivot? That kind of drama could be announced on May 3rd. So it makes sense to have protection, no doubt in my mind. But the debt ceiling's a little bit different. I think it's the same deal. By the rumor of a debt ceiling resolution, sell the news of a debt ceiling resolution. I'm going to stick with that. I really, really, really am. And I'm going to keep watching liquidity. So this is our intraday net selling buying, indicator, which basically showed that we tapped out on February 2nd, exactly at yearly resistance, formed this beautiful head and shoulders, came right down to support, which happened to be, ironically, a March level that had already been in there. And then we moved strongly higher, et cetera. And now we're kind of digesting and coming back in. But look at this. This is the 21-day. Like if this was a stock, you'd say it's just having a shallow pullback. So there's a lot more work to do here to get into this area and then break down. And by the way, that's the 200. And we stayed here for a while before we got above it. So the point is, I can't just we're going to fall apart because of a debt ceiling and political morons fighting it out. It's really about liquidity. So big picture, I know it's fading because I did this research and the Matt King quotes and all that stuff. Where is it? Liquidity. There it is right here. So Matt King of Citibank, right? I've mentioned him before. It's important because I knew that mid-October was central bank liquidity infusion because of coordinated global central bank intervention. I was on that early, but I didn't have any numbers around it. I had no idea how much collectively was being tracked. Citibank did. And so when they came out the beginning of March, beginning of March, I talked about it then, I tweeted it then, it's somewhere in here. But the notes basically were, we've risen 10% off the bottom. It's not fundamentals. It's $1 trillion in liquidity. Since then, it's grown to it had grown to 1.5 trillion. Anyway, his point, or their point in their analysis, is that we now have a combined effect, right, of 1.5 trillion as a tailwind for risk over the past 6 months. He's talking about from the bottom in October 12th to 13th was the exact, is likely to be slowing dramatically. It would not be surprising at all for it to be replaced with $600 billion headwind. So that's their pullback scenario. So I'm not surprised that we get a pullback, right? I've got this SPX roadmap that says, okay, level by level, we almost made it up to gap fill. And now we're starting to sideways digest and potentially roll over in a correction. But then I think it's going to go right back up. I don't see a major crash coming until after the debt ceiling. And by major, I mean like significantly higher VIX, right? Significantly more fear. Right now, I just don't see the market structure. My intermarket's rolling over, as I showed yesterday. Hold on, let me just show this again. Yeah. Let me show this again. Oops, that's the wrong one, but I'm going to show you anyway. Okay, so this is NYSE's kind of a way to kind of visually that, okay, we're starting to roll over. That was the 21st, by the way, at the end of the day. So we're literally talking about the end of the week. All right, so now let's go into the ones that I think some of you follow very closely. McClellan, NASDAQ, Summation, SPX, and NYSE, the big ones. So we have definitely petered out. We have definitely kind of intonated we're petering out. We're definitely petering out, but there's nothing here that says crash, right? So the point is we need to get it going, drop below 70, really fall, crossover, trigger the zero, and follow through. Are we petering out and risking a pullback? Absolutely. But it still doesn't, I still don't have, this is the same thing for NYSE, petering out, starting to roll over. But my point is we're not in this big, huge divergence like we had in other time frames. Divergence meaning there's breadth destruction under the surface and prices way up high. Well, one of those are going to correct, right? They're going to come meet each other. Right now, breadth is very, very different. By the way, that's SPX, right? Really hasn't even finished petering out. I mean, we've got to go below 70. There's no red in this chart. Now, Monday, we had a little stabilization. Tuesday, we're going to have a little bit of red, but you get my point. We're definitely in a weak period, but it does not look flash crashy to me. That's all I wanted to say. Breadth is coming back in for sure. NASDAQ 100. We definitely have risk of earnings disappointing this week in tech. They have, by the way, been disappointing for a solid year in their earnings report. Okay, they still expect tech to outperform this earnings season. They, meaning the analysts. All right, so some other things. I know energy is strong, and yesterday semis started rolling over, which you already have my chart of semis to SPY. Yes, it is an absolute head and shoulders on a monthly. So I definitely see weakness, but that is a cyclical, and it has been really well maintained. This is energy, XLE, and I had mentioned that I do see it starting to roll over, but it has still been, as you noticed yesterday with rotation, semis were the most weak of the big sectors, and energy was the most strong. So they still haven't given up. Wouldn't it be amazing if we had both energy pull back with semis? Oh my, then we'd have volatility, right? We're not going to have XLU or XLV, XLP, which are the fabulous defensive ETFs, save us. No. They would soften as well. They just don't have enough weighting. So another indicator of a pullback, okay? Pullback, not correction, like corrections like 20%. I just don't see that yet. But this, and I may, by the way, but I just don't see it yet. This is my, PMO buy-all indicator. When it starts to get tired, it gets tighter, and then you see some red. They try to save it, and then you see more red. So this is also end of week. This is starting to roll over. No question. This is still popping out market, tired market. So that's what we need to get below zero to really press. So we're not there yet, but we are absolutely starting, right, to roll over. So those are just some of the intermarket, like I showed you yesterday as a review. And then we can go to something that I think is kind of, oh yes, and I keep checking credit spreads, but they're doing fine, which is also kind of important. And then I talked about something else that I want to share. That's gold. That's the dollar yen. Oh, this kind of thing, divergence. So remember I've said one of the things that I really look for is this divergence. And that is that is price, NYSE, and then there's the underlying indicator, which is NYSE bullish percent index. So you can see there's a divergence, but it's nowhere near as big as this, right? We were lucky. So when I recommended shorting reflation trades, XLI, XLF, XME, right? Even XLE, this was because it had such a massive divergence from price, and it just looked like they were going to roll over. Plus, I had my reflation trade thesis. Anyway, the point is, it really did. Since then, we've had some strong move higher in copper and energy, but now that's starting to peter out. So copper's already pulled back. Energy, I think, is next. And you can see this formation here with NYSE, which is not yet conclusive, but again, it's petering out. So we just need to get below zero, and then this thing becomes a short again. So this is the same one, by the way, as this image, NYSE. Same thing, right? We're just starting to kind of roll back over. So kind of keep that in mind, that weakness is coming in. Volatility has not percolated higher. We need to get above zero to do that. We need to get above zero to do that. This, I had warned, did look like a good place for support, and it has since bounced, but there's so much work to get moving, right? I mean, so much work in volatility to really reprice assets. Because you know my saying, in lieu of sector rotation, there will be volatility. Right now, we have sector rotation. I want to talk about yields and the 3-month yield in particular, and then we'll go to the market. I still see, remember I have mentioned this rate of change indicator is a pull down in yields, which means I think yields are going to be a little bit softer than folks think. And it has not fallen yet. It has not fallen. The 1 month, of course, is spiked higher at 5.05 all-time highs, and all of the tones are basically sideways. But this rate of change says we're going to come back down at some point this year in yields. Okay. NASDAQ has not done anything right now. Everyone's very excited about this new bull market, but I don't see it yet until we can break out of this box. And credit spreads, by the way, have not done anything good or bad. But man, oh man, that is definitely bearish if it bounces here and moves higher. So we don't have anything yet. And then the 3 month, let's talk about this real quick before the market opens. You remember a while ago, actually November of 2022, okay? Here was a 5 handle on a 1 month, which is a 13-week interest rate yield. We are there. We literally hit 5.04, and I think that's it. I think it's done. IRX 5.04, doesn't matter. This area, I think it's done. I think we're going to have a softening now in the short duration and coming down. And what does that mean? Real quick. This yield curve inversion, which went from literally right here back in the same time frame, November of 2022, I said, careful, looks like we're going to get rejected here and plummet. We went negative 0.5, and now we are negative 1.5. That's 150 basis points. It's amazingly never been like this before. So we have been deeply inverted. That's what the blue zones mean. And the trouble starts right when we have this extended inversion, and then we are clearly in an extended inversion, but now we need to come back up. We need to come back up, and that's what triggers a lot more volatility. So I think now the 3 month is pretty much done going up. We're going to start to see this reverse higher. All right, so that's kind of the intermarket. I haven't talked macro at all. I talked a little bit about McDonald's. Let's go look at some of the other charts. We have dollar chopping about here, and yields falling. Bonds are still playing this game, right? Between 129, heck, just a sideways little jumble. Gold and silver soft as dollar has a little pop, but nothing really dramatic. Just nothing really dramatic in that scheme of things. Dollar yen, dollar yuan is pushing higher. Dollar yen will likely follow. We have a big Bank of Japan meeting on Thursday evening. Announcement, if they're going to do any policy changes, it would be then. Here's nat gas holding above that now gap of 2.35. And here is crude. Getting rejected slightly at that trend line as expected. I still see this, 75 area. Bitcoin is not only at 27,000, which is absolutely the first price target because it's easy, it's 50-week. It does not have any energy. So I would say this is definitely going to come back down into that kind of like 24 area. So first it would hit this. Let's see if it bounces. Wouldn't surprise me, by the way, if it breaks down so strongly, right back down to this kind of like 25,000 area. So I would say we're halfway there from 31 to 27. I think this can have a minuscule bounce and then trounce. It does not look at all supported. I'm in Zoom Q&A. So if you have any questions or comments for me, please hit me up there. And then you've got Archana, Rithika, and Michael in Zoom chat. If you want to hit them up, you need to hit to everyone. Looks like the website's working again, thank God. Okay, we know Biden's announcing his, re-election. I don't care about that. That's not market moving. But we do have the Qs, obviously, below the 21-week. So if you are short, you know where you want to stay below, right? This was this kind of candle of indecision. You can see absolute chaos as it relates to day traders and zero DTE folks. It's maddening. This is the next area we have to not just tag, almost tag, and then violently gets defended. We need to take this sucker out. So if you are really, really wanting to stay short in the Qs, you are hoping we not only tag 313.35, but we take it out on way to 311. We didn't last week, clearly, right? But that is pretty obvious, pretty obvious that we're getting tired and we're rolling sideways. Semis already rolled, right? Gorgeous resistance. It just took a little while. Now, what we really want to watch for is this kind of shenanigan, right? So where we absolutely, I was like, it's working. And then boom, right in the kisser. So it went right back up to monthly. And now it's rolling right back down. So just keep in mind that semis have already intonated a rollover with my intermarket. I'm wanting to see follow through. This is the first day of follow through. I need a week, and then I need the next week, and then I need the next week. But that is a good area for your option trades anyway. For if you're trading semi short, you make sure it does not get back above this 260, 258, whatever. I wish I cared. I don't. So in other words, we cannot have a strong market, obviously, without banks' big picture, both economically and tactically. But for right now, I just think there's so much overhang. It's really, really tough to trade this bunch. You can see how many weeks it stayed on monthly, overshot monthly, got supported again, and that's resistance. So a softening, we could do another double bottom. So if you're short from here, right, you can see this support in XLF, very, very clear, 32.85. There's a gap at 32.60. You get some levels here. We can absolutely head back down to 31.62. I just think it's not an easy one. So that's a nice rejection at the 55, and it's rolling over. Maybe you'll get some push through to 31.62. And KRE, we already know about, right? It's just languishing here on support. It's irrelevant. FRC, 102 billion in outflows and deposits. I already mentioned it's 90% down. It's going to be around in 5 years. It'll be irrelevant for 5 years. It just doesn't matter. I'm like, that's what the line is anyway. They're in it for the long run. They're absolutely not tradable, in my opinion. So if you're short, how do you get out of a donut? And if you're long, it probably goes nowhere for a few years. It just doesn't seem like any risk reward to me worth taking. That's me. I mean, look at this beautiful drop of 27%. And if you had, let's see, it just doesn't seem like it's worth the risk. All that for 100%. My God, you can do that on a 1% move, in the Qs. It just doesn't make sense to me. All right. Whirlpool, we're going to have some resistance. Oh, it's already hit. So they did beat, even though it's harder to sell stuff in this kind of backdrop, they did beat. They were hitting 145, and then immediately it's getting whacked in this kind of soft backdrop, right? So let's see what happens first with SPX. Yeah, we still gorgeous gap down right below the gamma level, and it's pushing, but we still have to take out this 411661. Looks good to 4100 still. I mean, I still like this. Weak sauce, look at diamonds, almost green. All right, so some of the stuff that is still working. Okay, so yeah, let me go over that one first. It's getting sold off pretty quickly. It's still, by the way, a bottom fishing play, which is high risk. I like the stuff that breaks out, but nonetheless, it was green at 145, 146 area, and it's firmly red. I don't like that candle at all. Copper, as I mentioned, coming down, and treasuries going up. Can't explain it, just it works. It's an economic tell. Starbucks still hanging in there. I like this one actually, still doing okay. McDonald's will have profit taking. I mean, why wouldn't you? But this is the protect area, this 292.53. You got a lot of defense plays that ran up into earnings, and then they sold off pretty violently. But consumer staples still green. Consumer utilities still green. XLV, still green. All right, Tesla. I still see 155. That kind of seems just patiently obvious, but it has definitely not taken out the low of yesterday's earning of the yesterday's candle. Apple saving the market. How the heck are we going to sell off with that? Not. Oh, so Amazon was a great, hold on, where is my data? Was great yesterday, right? That run up into 109.30 and then boom, right back in, but they have earnings in 2 nights. So a lot of chopping there. Microsoft has some weakness into earnings tonight. Google chopping 107 is key. Again, I have no edge on how they're going to do for earnings. Spotify tapped 144.5 and came right back in, but it's still a nice trend. It's been in a trend, literally off the bottom. Big, beautiful scoop pattern. That was a massive one. Pullback was shallow. Here's your 55, and it's just holding above the Keltner channel. So that's a really nice candle, by the way. Spotify. A lot of chop though, 120 to 145 just in this earnings. So they're selling. I mean, obviously there's a whole bunch of supply right here. That's the 100 week, basically this 145. Let's see what happens here. 136 needs to hold. But big picture, it's still been really nice. Okay, we've got weak advanced decline generally, and specifically with NASDAQ. I mean, with FANG. FANG has not broken the 10-week or key level. Semis absolutely have. That is definitely right now the best fishing. So fishing meaning, look at SMH. It came down here. It was a huge bear trap. And then immediately on that was the bank failure day, bank bailout day. Immediately got back inside this channel, moved higher, has been fading, has a little bit of a head and shoulders look on the daily, right? From here down to the apex, it is literally just flow, what do you call it? Gap right below that apex. So 241 is still in play for semis. They do not want to let this market drop. Whoa. All right. So the dollar yuan is definitely getting picked up here. China's sell-off is blamed on geopolitics and a new executive order to ban U.S. investment. What? Yeah, I'd have to check on that. Does anyone know that that is really a real article? A new executive order to ban U.S. investments. That would be definitely worth confirming. That would definitely be worth confirming. Anyway, it does have a nice scoop pattern. A little bounce in dollars. That's a headwind. VIX is still doing nothing. All right. So we have falling copper and iron ore prices. China Iron and Steel Association. Steel demand is still weaker than expected. Steel prices in China have dropped rapidly and steel makers face challenges. Steel makers urge to cut production to keep the steel market stable. PBOC has injected liquidity into the system. Reverse repo volume rates, Hang Seng, closed below the 55. Breaks ascending wedge. We know that the bare minimum drop is likely. Okay. Sorry, hold on. I'm trying to hit China selling. New executive order to ban U.S. investments. Yeah, that one's new to me. All right. That would be kind of a big deal, right? So I think I want to find that. If anyone knows, hit me up in Zoom Q&A so I can see that, because I don't see that, but I think that kind of matters. I know, Ashish, that's what I'm looking for. The pattern is very similar. I'm trying to find this new executive order to ban U.S. investment from China. That makes some macro moving event. I have not seen that, so that's why I'm looking. Really? I didn't see that. Bouncing about for about a week now, huh? All right, well, in any case, we got semi cracks. Remember the Micron deal? I should say deal, or lack thereof. So there's pressure on Micron, that's underneath. That's a great short, by the way, if you love this choppy, like, look at this. So I'm not saying it's necessarily a chase, but it looks like a swing short, as long as it stays below this high, the 60.87. Definitely looks like it wants to roll over more. XME, again, the reflation trades are just in weak. I don't know how else to put it. This is really gorgeous expansion candle. Now we're back on the trend line. I don't see how XLE is going to hold up this reflation trade pressure. When they sell off, they sell off. They just kind of all go together. Here's a bucket of money. Put it into defensives. Sell off reflation trades and put it in defensives, or put it into tech, or put it into emerging markets, something. But right now, it clearly feels like XLE has not gotten the memo, and it might just now be reading it. I just see weakness in that space still. All right, so UPS transports are getting hit because of UPS. IYT is Y, UPS. That, oh, that's gross. Oh my God, that's gross. It does that though. UPS is so dramatic. It's like Johnny Drama. If anyone knows that reference. All right, so let's see. Total contrast to what's going on with McDonald's, by the way. Strong first quarter results at McDonald's. Comparable sales grew 12.6%. And the CEO of UPS says, deceleration in U.S. retail sales resulted in lower volume than we anticipated, and we faced ongoing demand weakness in Asia. Given current macro conditions, we expect volume to remain under pressure. So that is, by the way, a double of what they had pre-market, and it opens up below the 200-day. That is, there's no other, that standard deviation move is amazing for a company this size, but it's not unfamiliar territory for UPS. When this thing rolls, it rolls hard. And when it moves higher, oh my goodness, it was hot fire flames. Okay, so here's support, 178. All right, miners continue that weakness trend that I warned about, and silver looks like a phenomenal short. If this breaks, you got a little bit of a head, shoulder, head, shoulder forming, a gorgeous rollover candidate. Again, these are all trend longs that have a pullback in place, right? A swing short pullback. Would not be surprised at all for this to head down to 22.20 and then come right back down to this 21 area. GDX is kind of going sideways. So it's digesting in time. That was, did I say GDX? Sorry, gold. It tapped, came back in. There's still risk here. You know how I feel about that gap fill. Just because there's something going on here with the distribution of precious metals. That. All right, TSM is a fabulous, oh my God, I don't even know what, 2 weeks ago. So as long as it stayed below 93.81, really important, right? It then would form this evening star reversal. Then it got below the 10-week. Then it pounced up into the 10-week. And then this, remember when it happened? I said, no, this is just fake. So that's a Pinocchio. It's lying to you. And it came right back down the next day. I felt vindicated. And then 87 has now become almost 82. And there is the gap fill. So we still have room to go, 78.74. No idea. Remember, Buffett bought here, sold here, decided not to have that exposure in Taiwan. That's a perfect example of a bull trap, or as Pring calls it, a Pinocchio. Love that. All right, so it should come into a little bit of support at this gap fill, but I would still say it has more to fall. Hold on. There we go. Close is 81.78 is gap fill and a whole bunch of daily support. Would not at all surprise me if it comes into 81.78 and has a little bounce. Okay. Still don't expect it to survive this gap fill of 78.74, but I would say 81.78 bounce and then trounce. So TSM short. I know NVIDIA hasn't really given up yet, but semis are definitely weak sauce. All right, so copper has come down exactly on cue, 42.13 coming into that 38.06 on a weekly. Wouldn't surprise me, but I think I might need to tighten that one up. Hold on. That's not the one I want anymore. It already filled that gap. It already filled that gap. There is no gap. Goodness sakes, it's really selling off strongly, which means bonds are moving higher. Oh, McDonald's had also reported they had the delivery business slow down. Uber and Dash are probably going to feel that a little bit. Uber is not, by the way, safe at all. Look at that. That had to clear 31.75 and stay below. As soon as it came back in, it was absolutely risk off. Now it's a bearish engulfing with a beautiful rollover in sight. Just needs to break 30. Dash has already gotten the memo. Yeah, spot looks bullish. I don't think that's a great short. It looks like it'll digest. GE has finally said, okay, we hit 100. If 80, then 100. They had earnings, by the way, first time in a decade. They're cash flow positive. And look at that selling. Look at the buy the rumor of cash flow positive, sell the news of cash flow positive. Yeah, Medtronics, unbelievable medical device plays are obviously bullish, but this one really took off. Most recently above the 200 and just kept going. MDT, there are a whole bunch that are still doing pretty well, but a lot of them are small. You know me, I always go for the largest cap. They have the largest options market. That's just where I feel, you know, cozy. It's just where I really like this striker, for crying out loud, is still doing extremely well. Here's MDT. That's a bottom fishing kind of swing trade idea that I didn't post, but I've shown it. BSX is definitely, I posted that. It's been doing great, that kind of thing. Gilead is still doing great. ZBH is still doing great. So I prefer the largest. S Swab, whatever, is a takeover candidate, and it's gorgeous as well. Look at that scoop pattern. Okay, but now it's got wicked high IV spiked because it's a takeover pattern, but it is looking gorgeous. Yeah, I'm not so crazy about oversold stuff, bottom fishing plays for trends. I much prefer the leaders. It's just how I work. All right, let's go take a look. Languishing. Oh, man, oh, man. All right, so if you're shorting SPY, because that's everyone's kind of flavor, you can do it. You can do it if you add some time. I personally said the May 5th puts, just because I think that gives a little bit more time. I don't do the one-day wonders. All right, so that's another room. But I know that there are traders here that do. So touch base with Michael. I know he does that short duration. Riley in Discord, it's just not my one-day thing, is not my thing. So anyway, it's working. Okay. 412 or 413 puts, you know, were like $4. I know that's not necessarily so exciting for most, but I just think it looked really relatively cheap. Yeah, and it's working. All right, so Qs may be the most belligerent short I have encountered outside of semis, but it's heading down to that 313.35. I haven't even looked at volume. Yes. Let's do breadth and volume. Sorry, hold on. All right, there we go. So we get a little bit of a pushback, which is basically a start. And look at the trend. Look at the trend line that it literally came right up to it. It's getting rejected. Above is very bullish, below is not. It's the first day in many days that we've actually had some follow through in breadth destruction. So don't get too excited. All right. Just keep some time in those options. It is just not what I say a big deal for a huge correction here. I just don't see it yet. All right, so GE was a fabulous, I mean, I've got no skin. I'm just saying fabulous if 80, then 100, first quarter in a decade of cash flow positive. So they're up in pre-market and now they're down. Same exact thing with Whirlpool. They beat up in pre-market, now they're down. Actually, they were up in aftermarket. GM, exact same thing. They beat. They got a waiting line of like 150,000 for their EV truck. Crazy. Oh, I didn't even see. Sherwin-Williams, exact same thing. They're also, by the way, I think a great trend play. You know, if they can get back up above here, I think they'll be great again. But they take some pretty big hits and then trend trade, but this is way too much. So I had that as a long and then it broke, and it's just as a trend long. I don't like that. It's going to take a while to digest here. Interested after it gets back up into 267 area. What was the other one that reported? That was your classic thing here, Corning. Yuck. All right, so leave those alone for a little while. So this MDGL, I forget which client asked about this, but they were long and strong, this MDGL. Oh my God. Look at this huge pullback, breakout. Pullback was relatively shallow, and then this spike higher, needed to get above the trend line to push up to 315. Congratulations. That was definitely what you needed to see, right? Now you need to see it get above 315.45. Well, congratulations. I would not have had the chutzpah to do that. U.S. April consumer confidence came in at 101.3, estimated at 104, so a little bit lower. Yeah, VRTX has got to be back in my consideration for trend long, but so this was literally held from 180 until this broke. So from 180 down to about 2, I forget what the final print was when I took it off, but it was around this kind of 292 area. It did make it back up. But now it's above. So it has to stay above this 325. But yeah, VRTX for consideration on the trend side. Starbucks is doing great. That's a swing. PEP doing great. That's a swing. Both of them really are in a solid sign of consumer spending. I mean, literally, nothing else to say about that. They're really in a solid show of consumer spending. Crocs, same thing with Starbucks coming up and out. Yeah, let me check. Crocs, I don't have that on any, what do you call it, trend list. No, but it's definitely been mentioned. Oops, sorry. It's definitely been mentioned as a swing potential as long as it stayed above this 118.68 and triggers above 136. So it's absolutely working. Yeah, VRTX would be considered trend, and Crocs, Starbucks considered swings until they could break out above all time. That's how I work. I really, really like breakouts, and then they stay very, very strong. They might digest and then move higher. That's fine. Choppy right here on VIX, but look, it's making a higher low, a higher low, a higher low, and these are all going to be higher highs. So there's something going on in VIX land. It's very challenging. That's why I said June. Oops, sorry. We still haven't done anything here. What? Okay, one-year consumer inflation rate expectation, 6.2% in April versus March, 6.3%. Stock indices pair their losses slightly after the economic data. U.S. home prices rise in February. I am such an inflationista in houses. Okay, TAC and MSTR. TAC. Remember, this is really frustrating, guy. Yeah, no other word around it. That looked fabulous as a, reflation. It was part of it, right? The caterpillar, all of that, the deer, metals and mining, reflation. But then it got an offer, and then it got another offer, and man, oh man, that's just tough. But this is supply, right? Look at the highs. It came up here and immediately sold off. It was like, wow, you can see it. Fully impressive. Came down to the trend line, and this is the offer business. Now it's coming back in again. So breaking below that 45 is a magnet for 42. So this is basically what I would call the risk premium in M&A activity. And by the way, I've not kept up on this at all because I'm not personally involved in this, but I'm just relaying the fact that they got multiple offers, and now maybe tech is saying go pound sand, or maybe the offers are rescinded. I don't know. Regardless, that's your level. We had a nice bearish Harami rollover. Here's your first level of support. We're below it. We're going to, come back down. We break the 41.25. We've got obviously some room back down to where it started. So definitely this is in distribution. When are earnings? Oh, tomorrow. Careful. Yeah, careful on earnings. You know why? Not just because it's earnings, and I've got absolutely no edge, and they're pretty diversified. And otherwise, they're a darling in many respects, except for what happened right here, what happened right in June. This incredible reflation trade, including XLE and the rest, just dumped, made it back up, dumped, takeout offers, still softening, but earnings is where they can announce some activity, right? Of activists or considering. New home sales were definitely higher. Let's go take a look at that. We're not at 71 yet. I'd just love to tag 71 and then let's see. That's a Pinocchio, right? I love that expression. In other words, it's lying. It's lying to you. All right. So I just say, wait till we get to 71 and change. Yeah. UPS literally hit a low of 178.25, 178. I already said is monthly support. That's where it should get digested. So I would not be surprised if it pulls an AT&T. What does that mean? So this is a massive expansion candle, and it absolutely denotes further weakness later. But that first candle, typically they monetize some puts. It bounces before it goes back down. So remember AT&T? massive rejection candle, overshot, came back in, and now it's still just kind of like sitting right here on that support level. So wouldn't be surprised, see that bounce? Where did it bounce? Into the 200, and then it comes right back down. So monetizing puts is very, very profitable in a massive standard deviation move like that, but it doesn't mean it's safe, right? We still have a massive head and shoulders on a weekly, but it's sitting on support. I'm just saying intraday, huge monetization of puts, it bounces, and then it goes right back down. Wouldn't be surprised if UPS does the same thing. Apple is reason for the season, right? New home sales are up 9.6%. And we already know inventory has percolated higher thanks to Logan. Arson had suggested BTI, just be careful. British American Tobacco PLC to plead guilty for violating North Korean sanctions and conspiring to commit bank fraud. All right, I know nothing about this company, less than nothing. But I'm just reading it because I know, Archana, you had looked at it and it has a good dividend, etc. And it doesn't seem to be caring about this news, just letting you know. I don't like any of the tobacco companies that have nothing to do with any other reason than they're just lost money. Waste of just sits there. Sorry. Walmart and Costco have moved out of their wedges, but they obviously need to keep going. I'm going to be excited if BJ's reports in May, they're already pushing all-time highs. This is a trend play. So this kind of digestion doesn't, I still think this goes really, earnings don't matter to me. In other words, this is a multi-year theme. So keep that in perspective. Copper is on a kind of support level in this 21-day and on a daily at 28.5. Remember steel? This is a kind of bear flag, but it's exactly what I expected. This thing is going to break down and I can see this coming all the way down to 56.30. So what does that mean? Well, if you have any exposure right now to copper or steel, protect. This is copper, COPX, did a great breakout and now it's reversing. I expect it to slide down that trend line. This is steel, reflation trades, right? Beautifully rolled over, bounced into resistance, and now it's sitting on the 50. I expect that to fall further. It might not fall further today, but I expect that to fall further. So I would definitely say protect. Emerging market stocks getting hit not only on China, but on the higher dollar relatively. I think this is another case where this is coming back down to 3.33. Look at the choppiness, crazy. But the point is, this is sideways, right? We have not gotten above 3.678. We're now going to go retest 3.33. The suspense. And as bonds are percolating higher, there's a little bit more pressure on SPY. These are gorgeous shorts, people. This is really, it's finally working. What did I say yesterday? I was so excited. I said, okay, this has got to end. We're not going to stay in this pattern anymore. We're going to have a big day tomorrow. And we're finally breaking down, right? 40.89 was my price target for this week. I just, didn't hit it at all. On a weekly? Yeah, I'm on a weekly. For the Qs last time, right? Not at all. We did not come down to 311. We came down to 412 something. Well, now 412.57. Well, now we're at risk of taking out this line. Very important. I know it's frustrating, but it's absolutely breaking. Now, I haven't looked at volume because it's not moving so much, but I will say it's doing its job of going sideways. Net selling is picking up. The pattern had already broken, right? So I was already like, ugh. We had a pop and then a drop, but we do not have follow through lower. That's what I'm looking for. When we get here, right, in net selling, I really think we're going to have that 40.89 in view. So we really haven't picked up very much. You know what I've noticed? Let me just see this. No, that doesn't work. I know TLT is just so frustrating because it's not breaking out. So there's really no edge here. They just have a rotation of chop. That's basically it. And the only thing I can come close to kind of timing this is copper. Copper pullback, bonds bounce. But otherwise, we don't have any edge. It has not broken 109. TNX has not broken 3.3. Dollar yen is sideways with gold and silver. SPY has finally broken below that 412, but it's not really following through. Qs have broken below 315, but they're not yet following through below 313.35. Diamonds, you know, whatever. It's all part of that regional banking scare too. I'm not as crazy about Nike, but it hasn't done anything wrong. Starbucks is a swing long, so that looks good. Bitcoin Trust still coming back in. So as long as this is falling, now right now it's on the 10-week, but that's the 27, right? Yeah, like look how tight it is on this 50. I wish I could. Yeah, I should blow it up. So we're sitting here, just sitting here. So MSTR and the rest are all proxies of the same underlying. So it got rejected, same place. Basically the 200 and the 100 EMA, just resistance. But this is support. So the only way that's really going to get a push is if it breaks 280. All it's done is come down to 27,000 Bitcoin and 280 MSTR. We need to break below. We've come right back down to the 200-day in ETHE. Riot, same deal, right? Tapped out, came right back in. Still above the 10-week though. So I would say 975 is first price target. 930 is second if you're short Riot. Mara has already come back to 856. Is AI related? I don't think so, but AI is already back to the 200-day as well. Oh, coin. Duh. They were the first to fall though. So coin's a little bit different. Coin was not only the first to fall in the kind of Bitcoin drama, but they're suing the SEC. So they're not taking that laying down. In other words, there's a lot of regulatory pressures on coin, et cetera, et cetera. They dropped right back down here, and I said, ooh, right, it's sitting on the 21, and now they are literally suing the SEC. So they're coming in and trying to protect. It's already up $1, but not really moving any more than that. Yeah, just trying. Oh, I hate how this reverts. A little bit more selling, but hasn't followed through. FDX, totally sympathy to UPS. The problem is here is that 226. It's definitely a gap down. Needs to break 226. Earnings are out of the way. Here's the Keltner. So if you're swing short, 220. 220 because it happens to be the 10-week and some support. But daily, it still needs to really break below 226 to make it down to that 219.5, which is basically right here. See how, you know, distances appear on different charts, kind of like your rear view mirror. This is a lot of room. Doesn't look so much here. But yeah, it's definitely weak sauce in regards to UPS. I don't usually use bottoms, but I want to just kind of see. Came up, came back down. I mean, gap, and then crap. So if you're swing short, you want to keep 229 in sight. It needs to close below 229 on a weekly. You need to close below 227, excuse me, on a daily. You need to close below this week 227 on a weekly. And if you're chasing, you want it to stay below 227 on an hourly. Yeah, Tesla's also popping up. So they're kind of rotating a little bit to some of the weak, to the previously oversold plays. Flip point. Oh, NVIDIA. I'm so sorry. Nice, but it needs to follow through. See this 21? Tag, 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 fake upgrade. Totally ridiculously fake upgrade. And then bounce right back to the 21, and now we have a nice, little push. I'm going to add another little trend line here. This is your area of quote unquote support. You can see it, right? That 265 is coming into play. You needed to break 264 to come down to 260. Does that help? Yeah, it looks good. Choppy, but good. Craig also reminds bond volatility move is starting to move higher again. It had come down. We have a flood of earnings this week. It's impossible to stay up on all of it. Honestly, too many. But the big one is next week with Apple. All right, so MSTR, tech, bond volatility moving up again. Oh, tech is also weak on copper coming back down. Yes, very good note, Ashish. Yeah, they're kind of very diversified. So they got some energy, they got some mineral. I think they have some agriculture too, don't they? Oh, USB. Oh, nasty. Yeah, Europe's a mess with its banking, but not quite sure there's a fabulous new trade here. It's basically the whole banking demolished, you know, Credit Suisse and all of that. I'm sure Tim is short all this stuff. Deutsche Bank rolling over. By the way, it's kind of interesting. I don't know if it's going to come true, but if you follow the direction of Deutsche Bank, EWG, it's not as dramatic, but it absolutely follows it did anyway for a long time, Deutsche Bank. Now it's a little bit different, but check what's in EWG. But this is the German index fund, which has gotten above the trend line and sitting pretty firm. In other words, money started flowing out of the US and back into Europe and Asia. It's almost as if I worry now that last in is going to be the first out. PepsiCo still has a little bit more to go, kind of like AZN, remember? AZN had that trend line. It had a beautiful gap up. That was a recommended swing trade. Pep also has the same look. Still has a little bit more to go. I don't think it's done. I mean, it might digest here, but that's a gorgeous breakout. Oh, GDX. Yeah, I still see the precious metals as a short. I can't unsee it. When it's done, I'll say, oh, I think it's okay now. But I don't see it as okay. I see silver as a fabulous rollover with gold short term. There's still nice trending vehicles. You guys went in way early before me. I didn't get conviction until December, January, and then that pullback and then that pop. Now it's just pulling back again. So I don't think there's anything more to say about that. Oh, CENX, aluminum, nasty. Reflation trades, doink. This is all that rollover. So whether it's copper coming back in, by the way, from a very strong chart, coming back in, or steel rolling, crashing, excuse me, better word, crashing through that warning, bear this, right? So this is how this works. This is how my eye sees it anyway. I see this in a beautiful, where the heck is, there it is. H pattern, if it was a little bit different. This is an H pattern, right? So in other words, it kind of forms a seat and then it comes, 5630 is all I can see. So I still see 5630, just taking a little bit while to get there, which means aluminum is not safe. Copper and steel. Doesn't mean that it won't be maybe later, but for right now, not safe. Aluminum, copper, and steel. I still see these puppies moving lower. Think XME reflation trades. I still see this moving to 47.85. Okay, 47.85 still in play. Nice little chair. Does that make sense? So I don't think it's time to buy that dip yet. And why on earth hasn't XLE rolled over yet? I don't know. But man, they're coming in for some protection right here. 83.50. Here's 83. Love this idea. 24 IV, that's cheap, relatively speaking. I like that idea. May 83.50. I know it's near, but still. Not 166 last trade. I don't think so. What the heck is that D? What the hell is a D? They upgraded this chart system, so I haven't seen what it was in beta form, and then they just released it Monday, and I noticed some changes, and I don't even know what this D means. You can show open interest on a different time frame. I'm afraid to check it right now. That is weird. I'll have to go look and find out. I don't know. IGV is mostly Microsoft, by the way. So this is coming right back down to 292.73, which is the 10-week. Microsoft reports obviously after the market, and it's weak. Gorgeous pullback in play, even if the Qs are trying to hold this 313.35. Nope. Definitely looks like 311 finally. What do we have for earnings? Not earnings. What else do you have for questions? I'm sorry. Yeah, I agree with you, Tim. I think Logan has done a recent this week and last week. Housing is definitely moving higher for housing inventory is moving higher. Very, very slow, but it's there. Oh, that's really interesting. I had the same comment. Tim says here in North Atlanta, there's nothing coming on the market, just junk and high priced homes. Since you know already my investment in home construction, not new homes, but you know, investment fluff and buff and that kind of stuff. Same thing. Distressed properties are the focus. Yeah. And then very expensive land and homes are for sale, but not a lot of sweet spot inventory. Oh, Micron. Sorry. Did not see that. Anything below, I thought I did yeah, below 60.5. This high of this candle on the weekly is basically 60.88. So it's a tricky one though. It's very, very tricky, but I like it. So far intraday, it's already kind of filled the first gap. This one is that first, the heck? Huh, what the heck? Okay, hold on. That's the first gap. So 58.73, 58.60, you can see it really needs to 58.5. We could have a little bounce before the next test. Here it is. Northeast surge looks quirky. Inventories. Yeah, I can't really make this. I can't really make out this one. Team. And big puts are coming in. Earnings May 4th, but big puts coming in. Team. Does that help? I don't think they're selling. No. This is monthly. So you get below this 150 area. I mean, obviously it's been protected here a few times, but you get below that 150 area, there's some room down, but so many charts look like this, right? ARC just needs to kind of fail. Coin just needs to fail. Texas Instruments reports after the close. It's a semi. I'm very negative semis in general, but I have no edge for earnings. Repeat, I'm very negative for semis as a trend reversal, as a swing short, but I have no edge for earnings. So I have no idea. Do you remember my price target for AMD short? 82. Here is your head and shoulders. So basically this kind of 93 area. Hit a top of 102.5. So let's call it $10 for ease. And I mean for ease. This is not a game of perfect. What's the short if it gets back below this 92.90? $10 lower, 82. So I still have 82 as price target. I'll make this kind of bright. And I think it'll overshoot and head down to 200-day. Yeah, still have 82 for price target on this measured move of head and shoulders. I think it'll overshoot and get down to 79 and then likely bounce back up. But we're absolutely, semis are a gorgeous right now pullback. And I haven't seen anything that is really, really bullish. NVIDIA just is the most belligerent of them. Belligerent short. Qs are still sitting on 313.35. NVIDIA is still sitting basically above that 265. BA, sorry about that. I don't like BA. I'm the worst person to ask about BA. I'm so sorry. I just don't have a feel for it. And I don't like it because it's gone sideways all year, right? So I still think we're going to come back down and tag this area. You know, we got a gap down. We had a bounce into resistance. We couldn't get above 209. We're rolling over. We need to break 203 to head back down to this 197. It technically still looks like that. But look at the sideways. Like there has got to be an easier way than to pick a sideways stock. So it's just not my favor. I loved this. This I was very excited about. Like big picture Boeing, I loved this short setup. Phenomenal. Look at the gap down. This is years ago. But the point is, nailed this. It was stunning. It went, oh, this is, but I don't have any feel for it now, right? And this is the COVID crash, but it was actually before that. You know, it was getting going on the 737 Max. But now it's just this distribution. Fast forward. We got this little distribution. I have no interest in it. But if you are, I don't know if you're long or short or what, but you need to get below on a weekly 201.87. And I mean, look at that. It tagged perfectly, bounced again. Here's that 21 week. It's starting to roll with the 10 week. We get above 207. It's bullish. We get below 202. It's more bearish, but I just don't have a lot of interest in Boeing. Terrible. Just needs to break. I haven't really found anything else. 196.40, it's still one. The interesting thing I think about this one, we already tagged the 100-day almost. I really thought it was going to come down here. It bounced and now it's, you know, toying with it again. I think next time we're going to take this out. So we bounce here at 198. I think we're going to head back lower. It's just, it's coiled for way too long, but I don't know. How's that? I do know that I haven't gone over any of my alerts. So let me go do that. There we go. We got some selling in oil. As expected, this one's really strong with me, right? So USO overshot, had that OPEC supply cut. Demand matters much more than supply, but whatever. We hit resistance, we came back in, got supported first time on this kind of 67.76. We bounced, almost into the 200 days expected. Now we're giving it up. So USO lower. You know, I don't care about UNG, but I keep looking at it for you. It's trying to get higher. Gasoline was the first tell that we were going to roll over. And I mentioned that we came right back in quickly. More importantly, this is a much bigger tell. Hold on. This. Gorgeous. So we bounced only because we had a little bit of support. See the dotted green line? Right into trend line resistance. Those have been there. I didn't put them after the fact. They've been sitting there, right? So this was monthly support. Really felt we were going to go down to 65, and then we would get strongly defended up to 75. We did. Then we got above 75. I'm like, all right, well, not to exceed 83, maybe an overshoot to 85, but we got rejected at 83, bounced on support into resistance, and now we're breaking down. I like this one short. I have no idea if we're going to break back below 75 and revisit 65. But on my monthly chart, I see 50. I just don't know when. So in the meantime, this is just the chase short, and then we'll see. Then we'll see what happens. Wouldn't be surprised at all if we just chop around here again for months. But I'm not bullish until we can get literally and stay above up here. So we're so far away. Like this would be monumentally parabolic if we got above 96. But Resistance is firm at this 93.80. We also have a massive, what I call mean reversion at 88.88, which means we could, get up here, but it will be a massive undertaking to get above 88.88. So anyway, we're just still playing down here. It's just a chop fest. I don't have a lot of bullish bent for oil right now. In fact, I have the opposite with energy and gas. I think XLE is going to succumb to some selling. That's what I'm expecting. That's what I see in my intermarket. I can't unsee it. Lumber is also on the lows. Yep, that's risk off, by the way. When lumber starts rolling over, it's risk off. Oh, gorgeous. We're going to get there sooner rather than later. That 40.89 is still my price target for this week. I listed on, what is it? Friday under market thoughts, 40.89. Hey, sometimes it works, sometimes it doesn't. I did say, I thought we were having the Qs tag this 311 that week. We got down and then we popped right back up. So it doesn't always work, just saying. And we still have potential for Amazon and Google and all the rest spiking higher this week. I don't know. All I know is we've got mid-cap tech rolling over like MDB and Team and some other favorites. They're just not getting going higher. They're choppy messes, for lack of a better word. Whoa. Didn't see that one. That is, by the way, on a standard deviation move on support. It's one of those, at some point, they're going to monetize these puts and that thing's going to pop up a few dollars. Those way extended. I love these if you know how to use options for that eventuality of them monetizing puts for a quick reversal, right? But that's it. It's otherwise it's a completely busted stock. Just like AT&T, right? Monetize the puts. They bounce very, very viciously, then they go right back into trend. Expecting UPS to do the same, and it hasn't yet. So 78 is being taken out. Oops, here's 78 monthly. We've been here before. Spiky, 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 but we're right on that trend line right here, right now. It's still hard for me to not expect that to get a short duration bounce. Sugar is still moving higher. DBA is digesting this 5-week breakout. It's still firmly above. It's still doing fine, but there are a whole bunch of other things that aren't. Good point. Amazon should be lower on UPS. So this was just a run into earnings into 109.30, right? Literally 107 then 109. I know Rithika posted that in Chase a while back, but this is definitely resistance getting sold. Now that UPS has said we had some really weak activity, maybe this will be an Amazon tell. Smart. Didn't think about that. I thought about running into earnings and then getting rejected, but earnings, I have no edge, none, right? But if UPS is warning, maybe Amazon will very much disappoint. I got nothing right now though, sorry. SPX gamma support is 4,100. It's also the 21, right? We're coming into that area. Okay, Netflix, sorry, Netflix. So here's how I feel about Netflix. Still nothing has changed. We had earnings get supported here at this 100-day, but you know where I still think this is going to come all the way back down, right? 313.39 is basically the apex of this move. Remember this weekly support. So this to me is rolling over very slowly, and I would see the 100, the 400, let's just see what that is. 400, let's call it 309, but it's going to move in this area. Anyway, I still see this kind of coming back down, and once we break this 305.63, we have a lot lower. Netflix is way out of the way. Yeah, this was basically the tap back into resistance, and now we're coming back down. And that was really funny because remember that day it got right up here and said, yeah, it's a Pinocchio, right? It's testing you, but that's resistance. And now it's coming right back down again. Yeah, I think Netflix as a swing short makes a lot of sense. I'm not so excited about chasing it, but that is a breakdown. So if you're chasing Netflix short, which is gorgeous, it is a breakdown, right? We don't know how these companies are going to announce this week in tech, right? Which could pressure other tech. We also don't know what they're going to say around ad spend. Very important to Netflix new model. Ooh, that's an idea. So anyway, the point is it is definitely broken intraday for chases, but just keep in mind that can also be support and can snap back up. But I liked it here as a short. In other words, I didn't think it was going to get above this intraday gap fill, and it did not. And now it's breaking down. It looks good for further. Here's your daily, a perfect snapback. I mean, this is a nice short. A perfect bounce, I should say. Reflexive bounce at the 100-day right into resistance, which if you recall, this is the 21 and the 8-day. It got rejected. Now it's rolling over. There's a bit of an evening star reversal. So if you're swing short, you stay short below this 330, right? Let's make it a little bit, I mean, obviously it looks dramatic here intraday, but from a swing standpoint, it's just getting rejected. It needs, look at the 320 and a half. It got absolutely defended. So now it needs to break below the 320 and a half. But this is such a magnet to me. When I have it in purple, it's just going to tag there. So now we need to get back to 313 and change. It's still not a breakdown until it gets below 313 and change. Then it becomes a breakdown. And then the teal comes into play. I know it's a strange system, but just humor me. It really, so far it's working. Intraday, swing, we'll see. On a trend, I said it had to stay below this kind of 336. It's coming back in. Just give it a little time. I guess that's it. No, on a trend, it has to stay below 370. Yeah, that was the that's the monthly. Forgive me. Yeah, that's the monthly, and then it bounced. So for all intents and purposes, it is working, but it has not confirmed. Apple's unchanged. I know it's crazy, right? Too funny. Apple's unchanged, and Qs are having a heck of a time breaking that 313.35. Look how, remember what we had last time was they violently defended here. That's the expression I used. So this is where we have been violently defended back on Thursday, April 6th. Wednesday, April 12th. Now what do we get? Tuesday, April 25th. What do we get? That's some selling though. I mean, breadth breakdown on Bollinger Band with a nice gap. That's a gap up and that's a gap down. All right, so breadth is definitely coming back in. And then what do we have for quote unquote selling? We got selling. Okay, so this says press shorts. What can I tell you? That's what it says. I know this is weird, but I have a line right here in the sand. So back in May, we had the market get defended. And then again, this January effect, right? This is all the October central bank intervention. But the point is, this is dollar to SPX. And right now, we have gotten defended, as you know, this whole October rally. Dollar came down, SPX went higher. If we're going to move higher, and I do mean into that SPX gap fill, 42.20, it's 42.1870, but 42.20. If we get above this level, we can go all the way up to 4,300. So right now we keep getting tapped down at this level, but it's not really conclusive. So this is kind of like my line in the sand for pressing long. Right now we're just having a shallow pullback. So when I was talking earlier about my intermarket tell saying, yes, of course we're rolling over, I can see that, right? But I don't see a dramatic correction in the cards because it's only digesting here. So back here, I don't remember if you remember on February 2nd, I said, where is the February 2nd? Right here. I said February 2nd, you can't see it, but trust me, because this is on a weekly. I said market's going to peter out and roll over. And then on the 16th, I said, careful, right? It's time. And we really, really pulled back. And then, of course, exactly on Monday, March 13th, we got supported, bank bailout. So yes, I use this ratio analysis to also determine the severity of a pullback. We are in a shallow pullback. We are not risking what I see yet as a correction where we really can press. What I just said, press intraday, is very different. This is press intraday. That's it. All it says is we can press intraday, but as far as I can see, it is just a shallow pullback unless we break this red line, right? So we can come back. I know that seems a little geeky, but just, you got to humor me. It is my way of telling if we're going to have a shallow or aggressive sell-off. This is the dollar to bonds, right? We got rejected, exactly. Come back in. Same thing. We got rejected, we come back in. So this is an example where you can kind of see all of this October intervention. That's literally October 23rd was the top in this ratio with a head and shoulders. We failed, which means the market goes up. We had a little pullback in December. Remember that? Okay, then we had the January effect. And then we had February 2nd. What happened February 2nd? I said the market's going to peter out. And then February 16th, I said, we're going to roll over. So this is another one of these charts that I use to kind of time the intensity of a pullback and the timing as well. All right. And then when did we get defended? Right here. Look how we came back in. This was the pullback. And then we had all that, bank is supported, Fed, Treasury, blah, blah, blah. So watching this as well to see if we're going to come back down here, which is when the market started to soften. And now we've been chopping, a lot of chop. But we don't have yet anything decisive, long story short. This is Fed liquidity coming out, market softening. Calls are already coming in for a SPY. Yeah. This is a Swiss franc on a monthly, which is basically what I showed you earlier. They need an intervention badly. And if they were to get an intervention, that's market bullish, by the way. So this is the dollar Indian rupiah, and it is still coiling. This is one where I'm going to be looking to see if it does kind of a fake breakout, fast failure. This runs a little bit with oil. It also runs a little bit with Fed hikes. We have been obviously moving into this coiled pattern, but I'm not sure where we're going to go except up. I'm pretty sure we're going to break out, but then the question is, do we roll over and break down? We still haven't gotten dollar yen moving higher, which would put more pressure on gold, but we do have the dollar yuan moving higher. Dow Jones is still stronger than the regular market, tech and the rest, because it's got a lot of cyclical trades in there that are still doing well. This is just crude, right? Coming back down into the gap fill. Tech is still holding up relative to the 10-year. This is the Apple 10-year. You can kind of see, right? Apple has earnings next week, and this is on a monthly, but it has been firm. So obviously we broke down into that September, October timeframe, and then it got defended. And Apple has moved very strongly higher relative to the 10-year, so it has not been affected by the 10-year. I'm still waiting for earnings to kind of figure that whole thing. But NASDAQ relative to SPY, remember this big head and shoulders, right? And then it got supported, moved up, and now it's getting weak again. So NASDAQ relative to SPY has come into distribution. We know that, but it's just likely to kind of roll down this trend line. It would need a lot more to break down. This is my stock market. Is U.S. government debt is the stock market, where basically this orange line is the 10-year, right? And this is a ratio of the 10-year to U.S. government debt. So this is where we topped basically in 2020. And then this ratio has fallen. You can kind of see this 40-year trend here. The extreme printing. And then of course the 10-year started moving higher, and this ratio started moving lower. And then we've been basically, this is a quarterly, by the way. So if you're curious what the heck that is, 3 months is quarterly. This is just monthly. We have basically been digesting since when? October of 2022, when we had massive central bank coordinated intervention. So what I do with this particular ratio is I'm watching how this is consolidating. This is also consolidating, but pulling down. This is moving higher into resistance. That should move lower. So it's one of those, again, where we could still fall further. But for right now, we got supported. That's all there's to say about that. We got supported on not only a trend line, which is fascinating to me, but the trend line. I mean, literally from 2014, this ratio got supported. Remember, this is what's his name, Powell, and Trump said stop raising rates, right? So he basically had to cut. Yeah, repo occurred, and then the COVID crash. Anyway, lots and lots of strange intermarket tells I look at just to kind of identify risk reward, and trying to time a Fed pause, which I think we're getting really, 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 really close to. So this is the, it doesn't sync with my text, but this is all the hiking regimes. And then when they end, and basically, I think we're gonna pause after this hike. Lumber's. You want lumber? I'll give you lumber. There's gold SPX. There's lumber. There we are. Here's lumber. Has not been able to get above. I mean, this is the descending 200-day. That really matters. And every bounce has basically been sold off. They got close, but it came in double resistance and failed again. I haven't updated this in months. But I don't know if you remember, it rotated higher on the January effect, which was really cute. Anyway, it's not an inflation or deflation tell. It's just basically, or even a tell on, new home starts or anything like that. But it is used as a risk on, risk off indicator. And right now it's pulled back down, and it has not really gone anywhere fast since literally the whole year. So it's flat. It's completely flat year to date. Not much of a tell there. All right. Any last questions? Big quick follow through. I'm sorry, review at 11. We got this bounce from 101 exactly, right? But it's not very, 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 very compelling. It is just basically a solid bounce off 101 right into congestion. We have 313.5. How frustrating with the Qs. That's the level that's been defended violently. We have oil rolling over to that 75 OPEC gap fill. We have yields rolling over with oil. Not a surprise, not a surprise. We have SPX so far getting a little bit supported. That's a 2-hour, by the way. But really no energy. We don't have anything really to write home about until the dollar can get above this trend line. But the fact that it is moving higher is helping, shorts in short. So we really need to get above this trend line, or at least tag it for some follow through to that SPX 4089. Bonds are bid, yields are not. Again, copper is lower, bonds are higher. Just go with it. Aluminum, copper, steel are all lower, and China is crashing with it. Just go with it. They're the largest marginal buyer of commodities. So that's all there is to say about it. I think XLE is a nice setup short into Exxon earnings. It's a little bit risky, but I like the May 83.50 puts. I think gold, precious metals is still soggy. And I think we don't have any credit stuff right now of concern. This is the high yield credit spreads. It did bounce where I expected it to, but it then came right back down inside. Technically speaking, that is important. This trend line, right? If we get it back above, I'm going to be, ooh, but right now we're not. And liquidity is still saying 27,000 for Bitcoin. Not a surprise, but this momentum indicator still weak sauce. So I would not be surprised to see this tag 25,000 in the next week or so. Oh yeah, that other one. This is the growth value rotation, and we will really see what happens after this week. But this is growth value. This is a Russell ratio. I love this for showing momentum, right? This was January 5th momentum came into the market. We had the January effect. We went sideways from February 2nd to March 13th. Literally, we went sideways and tech underperformed. And then we broke out higher again as NASDAQ and gold and Bitcoin outperformed. And then we started to peter out. And I said, warning, megatech looks like it's going to, peter out and roll over. We have, but now we have earnings. I've got no edge. I can see that this is still weak sauce, which means that value outperforms, but semis are weak. Reflation trades are weak. Only thing really strong has been XLU, XLV, XLP, defensives. I mean, consistently strong. So can we roll over? And I've already posted this chart. I've already gone over this chart, but honestly, this is not a volatility tell. What it does is shows me strength or weakness of a particular rotation. This was a weak momentum impulse. And when it goes sideways to lower, it means it's not strength. Did I just say weak? That's the weak. No. That's strength and momentum. This is now weakness. That's all it really, really shows me, not direction. Just to kind of clarify that. Oh yeah, here's the net volume selling indicator. Remember I said I was waiting. This is on a day. Vol Q is picking up, right? Volatility of NASDAQ picking up. Ignore Tesla and Snap. You can see weakness in China. I don't even have semis up here. Weakness in Netflix, right? Semis are right here, and the big ones. Do I have it by cap? I don't. I don't have it by large cap. That doesn't help. Anyway, we know that they're weak, and we have Texas Instruments tonight. Well, I wanted to show is that this, remember I had mentioned, has gone down, but what I was waiting for the white line to also go down, and now we have that. So we only have 0.21%, but that's encouraging if you are swing short, right? That we've had this rollover right here, pop, and then we actually had the rollover. You can't even see it, but it was on Wednesday in the afternoon. And then we have had a continued rollover. So that's encouraging for setting up swing short. You can see this trend line that I set, right? This was literally when I said February 2nd, this is going to peter out. And then it wasn't until the 16th when I said we're going to sell off. That was a double top, and then we did. And we fell some more. We got supported. Now look at it. Here's the 8-day. We're underneath the 8-day. We're chopping sideways, but we're losing that momentum. We haven't rolled over. We haven't rolled over in my Copic curve, but we have in my stochastics. So that's it. I still think we've got some more weakness coming in. That help? I hope so. I'm overdue. I mean, I'm over time. Correct, Thomas. That U.S. government debt to the 10-year versus the 10-year chart absolutely suggests to me that we will have 10-year yields below 3.33. The question is when. I'm impressed with the digestion that's going on here. And remember that chart that I showed you, the government debt to the 10-year is on a monthly, right? So I am impressed with this crazy Ivan stuff that's going on here. But at some point, and you know this because I've shown you on a weekly and a monthly. Hold on, let me get the monthly. Remember when I said I'm expecting this to take out the low, which was 3.33. We did. We literally did. It became a bearish engulfing on a monthly. And I said, it wouldn't surprise me if we have a bounce, right? Which always happens, not always, but almost always happens on a bearish engulfing, you have a bounce. Sometimes it can be very strong bounce, by the way. And then it resumes its travels, right? This is kind of like a trend reversal signal. We had no trend reversal signal by none. No trend reversal signal have we had at all since I literally posted bonds are done going up. Bonds are done going up in August of 2020. We've had nothing but strength, shallow pullback, digestion, right? Breakout, sideways, explosion, even more so right into that monthly. Pullback was wicked supported. Look at that 10. Very bullish engulfing. A gap up, exploded higher. Oh my God. Okay, all we've done is go sideways. On the monthly. And this to me just says we could very well pull back to 2.8 this year. Remember, it's a monthly this year. which means that bonds could or should outperform in Q2, maybe even Q3. I still don't think that this is going to crash. I just think this is the first time we've actually had a bearish trend reversal signal in the 10-year. Because it's on the 10-week, the 10-month in this case, to me, even though we haven't closed below it, haven't closed below it, but my goodness, I just think we are. I think we're going to kind of come down to this 2.8 at some point this year. Obviously, I'm wrong if we get back above 3.9. I'm dead wrong. We get back and close above 3.9. That's all there's to say about that. But for right now, we're sitting on a quarterly, which is so important. We're chopping sideways. Nothing is broken down, which is why I use that 3.33 as kind of my guideline. Where is my other chart? Yeah, that one. So on a quarterly, look at this, straight up, pullback was shallow. I mean, really, this is still incredibly big picture, big picture. All I'm saying is that on monthly, I'm expecting this to come down. Like, let's just 3. Maybe it overshoots to 2.8 and then pops right back up. But all I'm expecting is 3. Nothing so dramatic. A little outperformance if we ever get it. All right. But down days, at least we had a two-way market today, right? Yes, and I showed you the dollar. I don't think that the dollar is going to move up too much too soon, but we will absolutely track that. That's a really, really important one. Right? This is definitely support 101. You can't even tell on a weekly. It's so boring. But on a daily, it's been perfect, technically speaking. There's that trend line. I said, I think it's just going to bleed down, or that not what I dance or slide down the trend line, and it has, right? Bounce, but that's really support. So it's actually getting a little bit more here. I think it'll go back up to this trend line 102, and then if it gets above, well, then we got more weakness in the market. So right now I'm expecting this to come up to the trend line, and then we'll see, but that's the upside, this 103 again, which would create some of that downward pressure in markets. That's all I'm talking about for the next week. All right. QE, Fed will have to do QE at some point. I don't know when. Yield curve control, capital controls at some point. I have no idea. I don't know when. Do I expect it? Yes. I don't have a timing tool for that. Sorry. At some point, to avoid a crisis or in response to a crisis, to avoid debasement or in response to a debasement, but not right now. All right, have a great rest of the afternoon. See you tomorrow. Bye.